Okay, we have a number of questions here, so I wanted to give everyone a quick update, and then I'll read off the questions, answer them, then we can take other questions. It looks like the process is going pretty smoothly. We had the initial problems, we had the meeting last week. It looks like most of those have been ironed out, and so more and more cases are being submitted. So the hope is that we'll have about 500 in by, and these are cases, not individuals, so that'll be probably 2,000 or so individuals. We'll have those in by the end of the month, and then we'll keep doing that. The goal is to have everything submitted by the end of the year. A lot of that is going to be dependent upon different clients because we still need information. So if you haven't gotten the information in, I know it's a stressful time, but if there's any way you can do that, we do need that information before we complete everything. So please get it in as quickly as possible. Okay. First question. I'm 70 with health problems and was told our claims would be submitted first. Is this still the case? The answer is it depends. If we have all the information that we need, then absolutely. Typically, we do a first come, first serve. So as soon as we have all the information, we'll push it through. The only exception to that rule is that if people are over 70 and have significant health problems, then there is a specific section in the Code of Civil Procedure. It's 36A, it's called preference, and it allows you to push your case forward more quickly. And so we're doing the same thing here. Number 2, please provide an updated projection on the anticipated demand submittal rates. Number of submittals from Singleton per week or month, and the process start date. So that kind of goes with what I just said. We are submitting every day and every week. We think we'll have in about 500 by the end of the month. The last conversation we had with the trustee, it looks like they're going to want several thousand before they make the initial projections and the initial offers. So hopefully that will get in by November, and we'll be able to start getting distribution shortly thereafter. As we get more and more cases in, not just from us, but from other attorneys, then we'll have a better idea. But our goal is to keep up that 500 a month process and to get done by December 31st. I do think it will be extended a little bit. December 31st is the cutoff date right now. My guess is it will be extended, but there's nothing official, so we won't know until that happens. Okay, 3, how many submittals will be needed for the trustee to develop a confident statistical sense of likely payout amounts and associated adjustments? That's a great question. And the last time we talked to the trustee, he said that they did not know. That was up to the people that are doing the statistical analysis, and he had not received any final information. So they've said several thousand, but we just don't know. 4, what is the difference between keeping or selling the property that was affected by the fire? If Jerry could use an example with actual numbers, that would be helpful. Okay, so this is a really good question. Now, the main difference is when you sell your property, you're limited to diminution in fair market value. Whereas if you keep your property, then you're eligible for cost of cure, which is significantly much higher. Here's a good way to think of it. If you have diminution in fair market value, then you're going to be limited by definition to the pre-fire value of the property because you only have 100%. And what you do is you take the day before the fire, the day after the fire, and then that difference is your diminution in fair market value. So let's use, for example, a typical home in the Santa Rosa area. If you go to Coffey Park, you know, most homes in that area were worth around $600,000 or so prior to the fire. After the fire, you could sell the lots for, I think, anywhere between $100,000 to $200,000. So that gives you a good idea of what you're looking at for diminution in value. Let's take the low end. 600,000 is pre-fire value. Post-fire value is 100. So your diminution in value is right around 500,000. That's, let's see, around, math is not my strong suit, but that's around 75% of what the property would be worth, or actually be a little bit more than 80%. So let's say 80% is what you're going to get of the pre-fire value if you're talking about diminution in value. If you can do cost of cure, then there's no limit in terms of, there isn't that artificial 100%, because generally it costs more than 100% of the pre-fire value to do that cost of cure. So let's say that, using that again, that same $600,000 piece of property, let's say it would cost $600,000 to fix the property and another $150,000 to fix the landscaping, the fence, the outbuildings, all of those kinds of things. So that's $750,000. That would be, let's see, about 125% of the pre-fire value of the property. So that kind of gives you a pretty good idea. If you're stuck with diminution in fair market value, you're probably looking at about 80%, 75, 80%, something like that. If you're talking about cost of cure, then you're in all likelihood going to exceed 100% of the pre-fire value, 125, 150, something like that. Using the analogy we just gave, the difference would be 500 for diminution in value, 750 for cost of cure, so it'd be a difference of about 250,000. So that's, you know, that's kind of a rough estimate. I mean, you're looking at usually a pretty significant difference between the cost of cure and the diminution in fair market value. There are exceptions, particularly when you're talking about rural properties. It can be different, but, you know, 99 times out of 100, you're going to get more with cost of cure than you would get with diminution in fair market value. And the reason that holding onto the property is so important is that if you sell your property, then obviously you don't have a genuine intent to make the repairs, and therefore you can't recover cost of cure, because cost of cure requires that you have a genuine intent to make the repairs and to return the property to the condition that it was in pre-fire. So hopefully that was, I know that was a long explanation. Hopefully that was clear. If not, please ask follow-up questions and we can discuss. Those are the only questions I have written down. Chewy, are there any questions that came in through email?
Yes, I have a few here. It says, will we have guides who can help us with this process, compiling our claims, details, and losses?
Yes. Please reach out and we will help you do that. In terms of who the person is going to be, it will depend upon which fire you're in and what the need is. So the best thing to do is just to email info, info at slffirm.com, and that will go to our team and it will be assigned out to the right person for the particular issue that you have.
Thanks, Jerry. Another question here is, has the formula been settled on how the attorney's fees get paid?
No, we're fighting about that now. We have prepared a brief and we're going to submit that later this week. We're trying to get buy-in from all of the other Trust Oversight Committee members, which I don't think will be a problem, but obviously they have to read it and make any changes they think are appropriate. So we'll get that in. Our argument is that the trustee should pay a percentage, whereas the trustee right now is saying that the law requires that it be done on a what's called a lodestar method, which is the hourly fee of the attorney versus the number of hours spent. We think that's unfair because the specific language of 1036, which is the statute that allows for inverse condemnation, says that the victim in inverse condemnation is allowed to recover the reasonable attorney fees actually incurred. And it's not an hourly, it's a contingency. So we think the law is pretty clear on that. I think the problem is the trustee is being advised by attorneys from out of state who are the ones that have been retained. So hopefully that's something we can get worked out, but that's the state of that right now.
Thank you, Jerry. And it says, a concern here is, will the new wildfires further delay or impact settlement of our claims?
No, they certainly shouldn't. I don't know of any reason right now that they would. As far as we know, none of the current fires were caused by PG&E. That could change, but even if it did, there would be AB 1054 that would apply. And even if that didn't happen, the trust has been funded. So it really shouldn't have any impact. I wouldn't imagine that it would, but obviously there are no guarantees.
Thank you, Jerry. Just received an email here that says, what fire loss payments from my insurance firm to me will be reported to the trustee?
Okay, so let me make sure I break that down. So the question is, which of your insurance payments are going to be reported? The way that it works is that they're only looking at payments that are made in areas where you've made a claim. So if, for example, you received $500,000 for the cost to rebuild your home, but you were happy with that, that will not be considered. If you made a claim for loss of personal possessions and your claim was for $250,000 and you received $200,000 from insurance, then that $200,000 is what would be considered. And that's how they do it. The basic way that it works is that when we submit the questionnaire, it's set up to be broken down by category. And those categories correspond with payments made by the insurance company. Once those payments are made, they cross-check with the insurance company to see how much was paid out. And that's how they do it. So it's not a situation where they look at what you're asking for, they add up everything that was paid to you by insurance and deduct it. They're only looking at the specific category and they're making deductions based upon those categories.
I have another question in
Sure.
response to what you just said.
Mm-hmm.
I assume the additional cost of living is not factored into that, and also the cleanup that that your insurance allocates to the county or whomever provided that service.
It depends. If you're making a request for cleanup that's over and above, then let's say, for example, you had $50,000 in coverage a additional for insurance, and you demanded 75 because you paid out of pocket to do additional cleanup. Then what they would do is look at it and say, okay, if you paid 75 total, we're going to deduct the 50, and what you would get is the 25. In terms of ALE, it's only deducted if you're making a claim for ALE. Some people have been fortunate enough to have their ALE completely paid by insurance. In that case, we would not make a claim and it wouldn't come in. Unfortunately, a lot of folks, particularly in some of the older fires, have had to go out of pocket for ALE. So we would put the entire amount in, then the amount insurance paid would be deducted, and the balance would be what you would receive.
Okay, so effectively ALE is captured in this process. Is that what you're saying?
If you make a claim, yes. So
okay, so
again,
if you're a recipient of ALE, say 250,000 of which you've used, say 150 or something, that would be a factor.
Oh, no, not at all. No,
Okay.
if you have 250,000 available and
Yes.
you've only spent 150, then we wouldn't make a claim for ALE. But if it were flipped, if, for example, you were one of the earlier fires and you'd had to spend 250 total and you were only reimbursed for 150,
Right.
you would be entitled to recover that $100,000 gap.
Okay, thank you.
Sure. All right, Chewy, do we have any other questions?
Yes, I have. Did the 1099 situation get straightened out?
That's still something that we're dealing with. We've retained counsel and we're waiting for the trust's attorney to get us her final brief on it. It's narrowed down to one issue, or actually two issues, income for rental properties. And the other one is any kind of emotional distress for which there was no physical injury. So we are trying to get those two taken out. There's a number of different strategies that can be used. So that's what we're working on. I think the law is pretty clear that it does not need to be done. We've done tons of these cases and we've never had one issued. So the confusion, I think, is coming from the fact that the trust is a little bit different of an entity than a private corporation. And so what the trustee's advisors are telling him is that it doesn't matter what happened in these other cases. The trust has additional requirements that are over and above what a regular corporation would have. We don't believe that's the case, so that's the issue right now. But we'll have all that squared away and worked out before any disbursements occur.
Thanks, Jerry. I have a couple of questions here about medical records. And the question here is, I have a 2-year-old son who has serious autoimmune issues. How is his pain and suffering captured in the claim? Would we receive help with that data capture? And related to that, it says, how are medical challenges data captured to show how the fire adversely affected one's health?
Yeah, so good question. Let's take the second one first. Anytime you have a physical injury, you often have, not anytime, but you often have two components. One is the economic loss, and the other is the non-economic loss, the pain and suffering. So if, to use this, this client's question, if her son had incurred medical bills, then those can be submitted. So it's up to her as to whether she wants to. Sometimes people say, you know what, my insurance covered it, so I don't want to submit it and deal with the lien, because the way it would work is if you have medical insurance that pays for it and you submit those bills and you get compensation for that, now all of a sudden your insurance company comes back and says, well, we have a right under this, the terms of our contract with you to recover all or some portion of that. So a lot of people will say, I don't want to make a claim and I'm fine just letting my insurance cover it. That's up to you. It's case by case basis. Obviously, if you don't have insurance, you're going to want to put that in. It doesn't matter how minimal it is. The next issue is, how do you compensate for the physical pain and suffering? And that's something that you have to do in the narrative. So part of the questionnaire asks for specific questions about what you suffered as a result. And in addition to the standard ones, which are how close were you to the fire, your proximity to the fire, what your evacuation was like, were you placed in fear of imminent harm? And then the other one is what happened after the fire. Did you lose your home? What was your living situation like? Those kinds of things. In addition to those, if you actually suffered a physical injury, which is fairly rare, but certainly happens, then we put in the narrative exactly what it was that you went through. So here with the 2-year-old son, we would just describe what he experienced. We would describe what the diagnosis is, what the prognosis is, all of the things you would do, the same as if we were working up a personal injury case. If someone were, hit by a car or something like that, that's something that, we've certainly done a lot of times. So it's not a problem to do those types of narratives, but that's what we want to do. We want to describe what the diagnosis is, what the prognosis is, and what has been suffered in the interim. Even if the person was fortunate enough to make a complete recovery, generally there is something that's been suffered during that period of time, from the time they suffered the injury to the time they made the complete recovery. And so we would describe that.
Thanks, Jerry. I have a question here in the chat. It says, both my wife and I operated home-based businesses and had significant business losses that our personal insurance did not cover. How will we go about getting a claim for both businesses' operational loss due to displacement and in business property?
Sure, that's one of the claims that's in the questionnaire. So that's no problem. We list it and we list the bases. How much you can recover oftentimes will depend upon the specific circumstances. If, for example, you're displaced and you're not able to get back into your home for, a period of 2 weeks, 3 weeks, something like that, that's typically not very hard to recover because that's completely understandable and there aren't a lot of issues with your duty to mitigate, that kind of thing. On the other hand, if you are an employee of a place and it burns down, then there are a lot of issues about how much and for how long you can recover due to a quirk in California law called the economic loss rule. If you have that come up, let us know and we can explain it to you. But to answer the question that this particular client had, if you were out of your home for a short period of time, you were unable to work during that time, that shouldn't be any problem. If the physical business operated out of your home was destroyed, then you have a reasonable period of time to restart it. And reasonable is dependent upon a number of factors. Were you able to get into another home? Did you lose either equipment or records that made it difficult to simply restart? Did it take a long time because of an explainable reason, that kind of thing? All of that factors in, and the trustee and claims administrator will have to look at it and determine how long the reasonable loss is. The thing to keep in mind there is that there is a duty to mitigate. So you have a duty to make reasonable efforts to get the income from other sources. So again, if it's a couple of weeks because you're out, not a problem. But if you were to claim my business was destroyed and I couldn't start it up again for a year, and there may be very legitimate reasons, but you're going to have to do a lot more to explain why it took a year to start replacing that income than you are if it's just a period of a week, 2 weeks, 3 weeks, something like that.
Thank you, Jerry. Another question here is, when can we expect somebody from your office to call us to conduct interviews to capture the events, the evacuation, the emotional distress?
That's typically the last thing that we do in a claim. What we like to do is get all of the economic losses and everything else we need, and then the last step is that interview. So if all of your other information is in, then we definitely will be doing that very shortly. That said, some people want to get it out of the way right away, and that's fine. We can certainly do that. Again, if you want someone to reach out to you, the best email is info@slffirm.com, and they will get back to you. You can always email me, which is gerald@slffirm.com. But what I'll do is just send it to them, and then they will send it out to the person that's going to do the interview.
I have a question on that topic.
Sure.
So the last meeting that you held, we dived into that a bit, and I had requested to get a copy of mine, which I've not yet received, and was told that that was something that you guys like to provide after all of the paperwork is submitted, for which I've not done the content list or given you that. But I'm just curious, like, why the process is that way.
Sure. I think what there may have been a miscommunication, because if you're looking for just the narrative, then that shouldn't be a problem. I think the request may have been interpreted as a request to review before everything went in. So I think the response may have been, okay, once we're done with it, we'll give it to her. So if you just specify, I just want my narrative right now. I understand it's not going to go in anytime soon, but I want to review it to make sure it's correct. That shouldn't be a problem.
Perfect, thank you.
Chewy, do we have any questions that have come in?
No, we can open it up. I got to scroll through the
Okay.
chat and the emails, but you can open it up.
All right, well, let's open it up. I don't know if you guys are seeing this as a board, but I call it the big board because I have everybody on here before me. So does anybody have any questions? Let's go to the board.
There is one question I had in the chat.
Sure.
I could just read it if you'd like me to, or Chewy can find it.
No, that's fine. Go ahead and read it.
Okay. I got a call from your office to finalize my claim being input into the portal. I was told that just before it was submitted, I would be emailed to sign it. I thought that no signature would be needed from me until a settlement offer was made. Can you clarify?
Yes, that's a good question. They've just updated the process. So they have asked that clients who can sign it. And so we're interpreting that to mean that people that are, have email readily available, we will send it to them. But there is another option, and that is that we can get oral approval, and then we can sign it on your behalf. So that's something as we go along that you'll be asked, do you want to review it and sign it, or do you want us to tell you what's in it and then sign it for you? But that's something that they just added, and that's why that happened. All right, who's next?
Looks like there's a question from Mike McCulloch.
Okay. You're on mute, Jerry.
There we go.
Oh,
Hey,
there we go.
Jerry,
Go ahead.
I just had a question about the payoff. Is that going to be considered in personal income for tax purposes, or is that tax-free money?
Sure. Again, I have to warn you, I'm not a tax attorney, so I cannot give tax advice. The general rule is that when you're receiving funds to compensate you for the loss of real or personal property, and you replace that property, then there is no taxable event because you haven't received any kind of income. You're just being compensated. In our system, if you lose an item, we don't replace the item, we give you money to replace the item. So that's typically the way that it works. That said, there are exceptions to every rule, and there are a million exceptions here. A lot of it depends upon, for example, a lot of people, when they suffer a catastrophic loss like this, they lose their home, all their possessions, they'll take a capital loss. If you take a capital loss, then once you receive compensation that is tied to that capital loss, you've now had a capital gain. So again, there's a lot of little permutations. So we always say it's best to consult with a qualified tax professional, whether a CPA or an attorney, if you have specific questions. The general rule is, again, as long as you haven't taken a capital loss and you're being compensated for real or personal property loss and you actually replace the items, then there's no taxable event. But again, to be sure, we strongly recommend that you speak with a qualified tax professional.
Thank you.
Sure.
Hi, Jerry, I have a question.
Hey, go ahead.
How you doing? I wanted to know, I just got on not too long ago, but how is the claim process going? And what kind of feedback have you been getting? And have we been able to get through quite a few claimants, or where are we at where that's concerned?
Sure. So initially it was going extraordinarily slow. There were problems, and this is normal because they built everything from scratch, but there were a lot of problems, particularly with uploading documents. And because of that, almost no claims were submitted the first couple of weeks. After that, they got, and this began last week, they got those things ironed out. And since then, the process has been running remarkably smoothly. We've been submitting a ton over the last week. We think we'll have about 500 in this month, and we think that'll continue month after month. A lot of it will depend upon whether we get all the documents we need from all the clients, but certainly we think it's going to be 500 a month for the next few months, and then we'll see what happens. In terms of the bigger picture, for those of you who may have come in late, the trustee has not given us a specific determination as to how many he needs before they're able to run their models and determine what they're going to do for that initial payment. It looks like it's going to be several thousand. That should be done by November, December, according to my conversations with other attorneys and how many they're submitting. So that's the goal, and we'll see what happens.
Okay, so nobody's been contacted back and offered figures or anything
No.
like that on the cases because they have to wait till all the claimants put their cases forward?
Well, not all of them. Again,
On
because-
the amount that they need or whatever?
Sure, exactly. There's 24,000 separate cases, which is really the best way to think of it. There's 77,000 claimants, but those are combined into 24,000 different properties or separate entities. So of those 24,000, they want to get a few thousand so that they have a general idea and they can say, okay, we can pay out X amount in that first one, because
Mhm.
once they do make that offer, assuming it's accepted, they want to get payments out right away. They don't want people to have to wait. And so to do that, they have to have an idea as to how much of that final award they're going to pay. And I've heard estimates ranging from 25% to 75%. So I think at this point, they really have no idea. They were always talking about doing it in 2 payments. They floated the idea of doing it in 3 if they don't have enough data to do it in 2. So, we'll have to see. I think a month from now, they will have a lot more data, which they'll then tell us during the TOC meeting, and then we can share that with everyone.
Okay, good. Thank you.
Sure.
Hey, Jerry, it looks like Catherine Wood has a question.
Okay, go ahead.
Hi there. We were told by a real estate agent that selling our land before the settlement, it might affect the outcome adversely. Do you know anything about that?
Yes. One of the things you have to remember, and this is something we've talked about a couple of times, but it really is important. When you sell your property, you're limited to diminution in fair market value, meaning that you take the day before the fire, the day after the fire, and the difference is the diminution in value. By definition, that limits you to 100% of the property, because the property is not going to have a negative value, and 99 times out of 100, the property is going to have some value. A perfect example is Coffee Park. Those lots were selling for 100, 125, 150,000 post-fire. So what I tell clients is, if you live in an urban environment, your diminution in value is probably going to be 70 to 80% of the property if you lose your home. In a rural environment, it varies considerably, because a lot of the time, if the house burns down, but you have a very large acreage with beautiful trees, you can still have a significant amount of value left in the land. So it might be lower, it might be 50%. Whatever it is, it's going to be less than 100. If you keep your property, and if you can honestly say you have a genuine desire to repair the property, then you're entitled to the cost of cure. And the cost of cure can exceed the pre-fire value of the property. There's cases that have supported up to 167% of the pre-fire value. But just to take a conservative number, let's say it's 125%. The difference is, if you keep your property, you're probably looking at something like 125% of the pre-fire value if you had a total loss. Whereas if you sell your property, you're probably looking at 70 to 80%. So that's a big difference. And that's why generally, if you can, it's a good idea to hold on to your property.
Okay, thank you very much.
Sure thing.
Jerry, it looks like Mr. Robert Lang has a question.
Okay, go ahead. Chewy, can you hear anything? I'm not hearing anything.
No, I've asked him to unmute.
Okay.
He has his mic muted. I do have a question here that was sent via email.
Hey, hang on one sec. Mr. Lang, why don't we take this question, and if you can see about your mic, then we can go from there. If for some reason your mic's not working, please just ask Chewy the question and he can read it out.
Yeah, or
Go ahead, Chewy.
Mr. Lang, if you're unable to, you can reach me directly and I'll ask it. Call me at 619-537-9995. I'll be happy to ask the question for you.
Great.
The question we did receive via email is back to the ALE issue.
Mm-hmm.
It says, my insurance policy had a total of 500,000 payout for ALE, and they paid it all. Will the ALE payout be deducted from any award I receive from the trustee?
No, unless you make a claim for ALE. So if the 500,000 that you received completely compensated you, that's great. We would not make an ALE claim and nothing would happen. On the other hand, if your actual loss for ALE was, say, 550, then we would make a claim for 550 and they would deduct 500 and the balance would be the 50,000.
I have a question.
Okay, let's go to Miss, am I pronouncing this correctly, Bordelon?
Oh, that's correct.
Okay, and then we'll come
so-
back to the previous question. Go ahead, ma'am.
Okay, I'm referring back to your previous comment about the number of claims that
Uh-huh.
are being submitted, and you're hoping to submit 500 a month.
Right.
With 7,000 cases, that's many, many months into next year. And I thought originally you thought all of your cases would be submitted by the end of this year.
Right. We have 7,000 clients, but we
Okay.
only have 2,700 cases.
Ah,
And so we're anticipating that we'll be able to get everything in by the end of the year. Again, assuming that we get all the information. In reality, what usually happens is there's around 10% of folks who, you know, they're going through difficult times. They're not able to get everything, so it takes a little bit longer. But that's the reason. You're 100% right on the math. It's just that we only have the 2,700 cases with 7,000 clients.
okay, I understand.
Sure thing. Okay. Chewy, did you get the written message?
No, he hasn't submitted anything. I do have a question that was emailed to me. It says, does money paid to me from insurance for debris cleanup have to be paid to the cleanup effort from the government as it was originally required in the contract, or is the government giving up the claim for the debris cleanup money?
Okay, so if you signed a contract with the government, and it's different in every fire, sometimes it's run by the county, sometimes it's run by the city, but if you opted in to that program, then the agreement is that they will do the cleanup, and all the money that would go to you from your insurance company for debris removal goes to them. So that's very important to keep in mind. What I always tell people is generally your insurance company will hold on to it and just pay them directly. Sometimes they pay you. If they do, I would really keep that in a separate account, because at some point they will ask for it. And because they're the government, they're going to get it if there's a signed contract and you've received it. So, you know, I don't have it it just doesn't work with them. They'll lien your house. They'll do all kinds of nasty things. So it really makes sense if you get that, put it in a separate account, and then if and when they ask for it, you've got it.
Thanks, Jerry. I don't have anything else submitted here.
All right, let's go back to the big board. Who's got a question?
Hi, Jerry. Hello?
Yes,
Can
I'm
you hear
here.
me? Oh, hi. I know you've mentioned several times that maybe they will give an extension, and I'm having some expert work that may take a while to get done. Do you have any idea if that does occur, when that might happen?
Yeah, and in terms of your expert work, I'd be very surprised if there's any issue there. I mean, I think we're probably looking at about 60 days or so before that's going to be done. If it takes more time, it takes more time. And we can always ask for an extension on a case-by-case basis. And if you have an expert who's actively working, it would be granted. In terms of the overall, just the general extension, I think what they're going to do is to keep it there in order to encourage people to get things in as quickly as possible. And then my guess is around December 1st, could be a little earlier, could be a little later, they will extend it out either 30 or 60 days. I believe it'll be extended at least once or twice that way. I'd be very surprised if it wasn't extended at least 90 days. Beyond that, I'm not as sure. And the reason for that is the trustee has to strike a balance between allowing everyone the chance to do it, but at the same time, there is going to be that holdback. So he's not going to be able to determine how much of that final amount that's held back from each person he can release, whether he's going to be able to release the full amount, a portion of it, if so, how much, until all claims are adjudicated. So he's in the position of saying, I've got to balance the interest of the folks who haven't submitted yet with those people who got everything in early and you know, have a significant amount of money that should be coming to them I want to get to that to them as quickly as possible.
Thank you.
Sure.
Jerry, I have a question here about ALE. Can you explain in a little bit more detail what ALE is?
Yeah.
And is covered under ALE, please?
Sure. ALE means alternate living expenses. And that is designed to compensate you for having to find a temporary residence. So the idea is, let's say your home burns down, you now have to go out and get a new place to live. And so ALE is designed to put you in a similar position of like, kind, and quality. That's the term of art that is used in the industry. So particularly after fires, when there's a shortage of housing, you can go through it very quickly. It might be that in a normal circumstance, you could rent, let's say you had a standard home, 3-bedroom, 2-bathroom. You could rent that same home furnished for $2,500 a month. But if you lived in Santa Rosa immediately after the fires, now all of a sudden there's a housing shortage. Instead of paying $2,500 a month, it might have to be $4,000 a month for the same like, kind, and quality. So that's what ALE is. And the reason for that is if you are like most people and you owned a home, you had a mortgage, you still have to pay that mortgage even though your home burned down. And so most people aren't able to pay two. They're not able to both rent a home and pay a mortgage. So the idea with ALE is when you lose a home, you keep paying the mortgage, but you get a certain amount of money in order to compensate you for the alternate living expenses. Again, typically it's capped at a certain amount, whether it's 2 years, 3 years, or sometimes there's a hard number. I've seen it as low as 50,000. I've seen it as high as 200,000-300,000 in terms of the cap. Then there are some policies that just say, as long as you're out of your home and you're making reasonable efforts, we'll keep you in the same like, kind, and quality. And if you had a very nice house, that's how you can get up into the really high numbers of several hundred thousand. So that's how that works.
Thank you.
So Mr. Lang, are you able to get your mic working?
Yes, I think so.
Great, we can hear you.
Oh, great. I finally seen your picture too. So I got two things done. Anyway, yes, my question was just a rough idea. Let's say my claim came to $200,000. You mentioned, I believe, 25, that they're thinking about 25 to 50% of, is that what they're looking at paying? Like on a $200,000 claim, it would be like $50,000?
No, what I was saying is this. There's going to be a number that is given by the trustee, and that'll be the final claim. And so the final claim amount. So you can either accept that or you can say, no, we're going to do a de novo. But eventually you'll get to a point where we have the final number. And let's just say it's 200,000 for your case.
Right, exactly.
So once you get that 200,000, there's going to be, the payment is going to be made in at least 2 phases. And the reason for that is the trustee has to treat everyone equally.
Oh, I
So
understand that.
Yeah, so he has to make sure that if he can only pay 90%
Right.
of that 200,000, that he pays 90% of everyone's.
Right.
So he is going to pay out a certain amount once he issues that final claim number and once it's accepted by you.
Right.
And we don't know what that'll be. It could be 25%, could be
Oh,
50%,
okay.
could be another percent. Then
Yeah.
he'll hold back the rest. And then once all the claims are adjudicated and he can say, okay, everybody gets 95 cents on the dollar, then he would pay you the balance.
Right. Okay. I understand that. That's a lot clearer because I knew you weren't going to allow that.
Okay, sorry about that. But yeah, that's how that works.
Okay. Now I know how the phone works too. You guys are doing a great job. Thank you for all the help. And Joanna, also let her know your team has just done a fantastic job, and especially keep us informed, because there's not a lot of attorneys out there are letting their clients know what's going on, the people I've talked to, and you guys are doing fantastic. Thank you for the work.
Well, thank you. Okay, big board, what other questions do we have?
Ms. Nixon?
Go ahead.
Okay, does that ALE affect renters? Is it the same principle, or is that mostly for people that own their home?
That's a really good question. It actually can affect renters, and here's how. Let's say that you had a 2-bedroom, 2-bath apartment, and you were paying $1,500 a month.
Mhm.
You then lost your home, and you found the same kind and quality, like kind and quality, 2-bedroom, 2-bath, but you had to pay $2,000 a month. You would be allowed to claim the difference between those two because that is an additional living expense that you're incurring as a result of the fire.
Okay, do they look at extra living expenses if you've had to continually move rental after rental after rental? How does that's a different scenario? Or?
No, those are they would be classified as out-of-pocket expenses.
Mm-hmm.
But yes, if you've had to move as a result of the fire, and a lot of times people have had to move more than once, you are allowed to claim that. Obviously, the more times you move, the harder it is to explain. Now, that said, we've had people that have had to move several times, completely reasonable. It's just that, they would expect one or two. As you get more and more and more, you have to provide more detail, which is understandable. But again, a number of our clients, we've had people that have had to move 6 times. And it's because, they get into a rental and it's short term, and then the person wants to raise it and they can't afford the rent, so they move. Or, unfortunately, people have moved into places with mold. There's all kinds of stuff. So
Right.
it's, as long as it's explainable, shouldn't be a problem.
So that wouldn't be listed under ALE, that's additional living expenses?
No, that's something we would do out of pocket because those are things that you've actually incurred, but it is something that you can claim.
Okay.
Yeah.
Can I ask a question just to
Yeah,
a
please.
follow-up of that? Where does that sort of fit in? So for example, in our scenario, we decided to separate during this time. So there's 2 homes now having to be covered for. Of course, the insurance is covering just for the one of them. So if you were trying to, can you explain where that fits in? Sorry.
Yeah, that's a little bit different. The way it's going to be looked at is that they're required to do 1 of like, kind, and quality, but
Okay.
not 2. And
That's right. Okay.
Yeah. So. All right. Do we have other questions?
Yeah, hey, Jerry, I got a quick question on
Yeah.
AL. What if you moved into an apartment that was smaller than the house that you lost, but you're paying less than your mortgage was?
Mhm.
But I mean, you moved into a 2-bedroom and your house was 4-bedroom. Is there any does that factor in at all?
It does not. It's not an economic damage because you haven't suffered an economic loss. That comes in the non-economic nuisance damages. So the annoyance, disturbance, inconvenience, and mental anguish. And that's the second part of the standard process. The first question is, how close were you to the fire? What was your proximity level of danger? The second question is, how did your life change as a result of the fire? And if you went, from a home, 4-bedroom to an apartment, 2-bedroom, obviously that's been a significant change. So that's something that we want you to be compensated for. All right. Other questions?
Okay, I got one.
Sure, go ahead.
So besides the letter of our story of what happened, or our experience with the fire, then we also I haven't looked at that questionnaire for a while, but so we write a statement how our life has changed since the fire, or does that go? So is that a separate? Because I don't think I've directly addressed that.
That's part of the narrative. Is we talk about what you've been through since the fire. So in the questionnaire has a section for nuisance damages and one for emotional distress, which is the zone of danger. The nuisance damages are everything that's happened. I know nuisance it tends to downplay it. The reason we call it nuisance is that's the cause of action that it comes under. But that's where we put that.
Okay, so I'll just make sure that that's covered
Right.
thoroughly in my statement.
Yes, exactly.
Okay, thanks.
Shuey, do we have any other written questions?
No, I don't have anything submitted, Jerry. Wait, I have an email. It says, you know, with the trustee being paid thousands of dollars, why is it taking so long with the funds being available since July?
Right. Well, again, the problem is because of the requirement that everyone be treated equally. And so they had to come up with a system that treated absolutely everybody the same, including the pro-pers. And then they had to figure out a way that they were going to process all these claims, and all of that had to be done from scratch. So that's the reason, is it's taken a long time to build, design, and get the system operational. I think now it is working pretty smoothly, which is great, but it is going to take some time.
Thanks, Jerry.
So, any other questions? Okay, well, great. Obviously, any questions you have, please let us know. Let's plan on doing this again next week. And really want to thank everybody for your patience. It is finally starting to go smoothly in terms of the submissions. So as we get more information from the trustee, if, for example, we get any new information from him, we'll put out a letter this week. If not, then let's just plan on meeting again next week. And for all of you in Northern California, stay safe. I know there's a lot of stuff going on up there. Take care.
Thank you so much. You too.
All right. Bye-bye.
Bye-bye.
I'm Michelle Nixon.